Welcome to Finance King. Can I take your order, please? Yeah, give me a dip for a BTL at 75% LTV. PP is 170K. Buying in an SPV. Property is BMV, and we will develop into an HMO. GDV is going to be 400K. Now, make it fast. You got that, kid? You lost me a dip, sir. Hey everyone, this is the People's Broker. There are many acronyms that we use every day in our finance life as a finance broker. A lot of times without even knowing what that acronym means or what it stands for. I mean, we understand what it means, but we wouldn't be, if the customer asked us what does that stand for, we may struggle. Now, as long as I've worked in finance, I have always avoided using acronyms. Never in front of a customer, because a customer won't know what you're talking about. And a lot of the times, or most of the time, customers won't even have the courage to ask you to explain exactly what that means. And that is why, interestingly, I was reading a recent research, and according to that, 58% of the customers admitted using Google to make sense of a lot of the terms when it comes to finance. But if you can do that for that client beforehand and they don't have to use Google, you're going to build a lot of credibility. The reason I also avoid using these acronyms with my peers or people I know who probably will know the meaning of this, but never assume, is I don't want to develop that habit of using these, and then without knowing, you're going to start using them in front of the customers and you're going to be in that situation. So today's video is all about acronyms. I'm going to talk about some of the common ones, some of the not so common ones. More importantly, what I want you to do is at the end of this video, let me know which ones surprised you the most and which ones you absolutely had no idea or always thought meant something else, but it actually means this. Before we start, please give this video a thumbs up and give this channel a subscribe. Now, without any further ado, let's get into it. So guys, firstly, I'm just going to start with some of the really common ones. Maybe common to me and you, the brokers, but to your customers, maybe not. So perhaps if your customer is watching this video, if you want to share this video with your customers to make sense a lot of these terms, please do so. So some of the very common ones, PP, that's purchase price. We know exactly what that means. BTL, so that's buy to let. That means you're buying a property to rent out. LTV is another one, which stands for loan to value, which means what is the loan being borrowed against the value, or how much of the value of the property is being loaned. So for example, property is worth 100,000, you're borrowing 60,000 pounds, that means the loan to value is 60%. Simple. GDV, so getting a bit more complicated. So it's to do with development finance. So GDV stands for gross development value. So gross development value is what you're anticipating a project will be worth, or a project is worth, once all the works are complete or once the development works are complete. Normally GDV, gross development value, is something that valuers give you when they're doing a valuation, when someone is looking to do a project or raising development finance. Another one, common one, is JV, which stands for joint venture. So this is used a lot of times when two people are going in on a project together, or a property purchase together, or an investor is just putting in money into a project or giving it to the other person who's going to be the main driving force, but the partner is just putting in the money to fund the deposit or something like that. So a lot of time is referred to as JV or joint venture. Another common one that is used a lot is HMO. So HMO stands for house with multiple occupants. What that means is that when a property is let out, it's not let out to a single family. If there is more than one person living in the property from different household, that is house of multiple occupants. SA stands for serviced accommodation. So that's another very popular concept right now, where properties are let out as serviced accommodation rather than a single let. But this term gets thrown out a lot, and it puts people off, or it just not put people off, but it kind of like surprised, like SA. What is that? Another one is DIP, which is decision in principle. So this is when you're applying for a mortgage or any kind of finance. This is a decision in principle which the lender gives you first. So it's not an offer, it's a decision in principle to say, you know what, we're going to lend you this much, subject to valuation, underwriting, whatever, things like that. Another one which gets used a lot these days when it comes to property is SPV. So SPV stands for Special Purpose Vehicle, and all that means is a limited company is being formed to purchase a property or to hold property so SPV is a term which is used a lot. Another one is BMV, so that stands for below market value. That means when someone is buying a property which is below market value, but a lot of time people just throw around the term BMV. Another one is R2R. So a lot of people don't know this one, and I initially didn't. So R2R stands for rent to rent. So what that means, it's a rent guarantee. So what happens is that an individual or an organization will take over your property from you to say, you know what, we'll take over your property for 12 months and we will find the tenant, we will rent it out to you. We will give you this much guaranteed rent on the property, and that's known as R2R. Then that person finds a tenant and rents it out. Now, they might have promised you this much guaranteed income, but they can rent it out for a bit more to that person that they find, to obviously for their time, to pay for their time and effort and things like that. So that's known as R2R. So just look out for that term. Now let's get into some of the complicated ones, and these two gets used a lot. So there's a term used as SAS, which is SSAS. What that stands for is Small Self-Administered Scheme. So it's to do with your pension. So what a SAS is, and again, a lot of this is used in the property finance when people are using SAS. Pension scheme, which is normally set up by a limited company, usually for private and family-run businesses for the benefit of owners, company directors, family members who are employees. So that's what a SAS is, to do with pension. Another big one that gets used a lot these days is SIPP, which is SIPP. What SIPP stands for is Self-Invested Personal Pension. What exactly is that? So it is a type of pension which allows you to save, invest, and build up a pot of money for when you retire. So it sounds like a normal pension, right? But what a SIPP is, the key difference between a SIPP and a normal pension is that it gives you more flexibility with investments you choose. Again, I'm not an expert on SIPP. I'm not an expert on SAS. I know people who are. So go to those people, go to those pension experts, and they can actually advise you on those types of pensions. So guys, that was a really quick episode today, just uncovering some of these acronyms, some jargon busting, just to help you in your everyday life as a finance broker. Hope you found useful, and do let me know which ones surprised you, which ones didn't know, and which ones you learned today. I hope you did. Thank you so much for watching, guys. Before you go, please do give this video a thumbs up, give this channel a subscribe, leave me comments, and send me your topic suggestions. Also, if I can help you in any way as a fellow broker, do write to me directly. The email address is on the screen. Thank you once again for watching, and I will see you next time.